Hello and welcome. You're watching the Global Reset from the CNBC TV18 Prime Ionic Wealth Studio. I'm Prashant Nair. Well, today we turn the spotlight to one of India's most compelling long-term opportunities, aerospace manufacturing, a sector where global supply chains are being reset. Capacity is being relocated in India is quietly, but it looks like decisively moving from the periphery where it has been for a number of years to the core of it. Over the last couple of months, on CNBC TV18 Prime, right here, we've heard this shift directly, and we've conducted interviews with the former heads of Boeing in India, Airbus in India. Both of them told us that India is no longer just a market to sell airplanes, aircrafts, but an emerging sourcing and manufacturing base for the world's biggest aircraft makers. Today, we go one level deeper into the companies actually building that capacity on the ground. And that brings us to Aequs, a homegrown precision manufacturing company that has built India's first vertically integrated aerospace ecosystem at Belagavi, a 250-acre SEZ, delivering everything from machining and forging to aerospace assemblies and special processes, servicing marquee global OEMs. At the center, of course, of the story is its founder, Aravind Melligeri, chairman and CEO of Aequs. He's an engineer, entrepreneur whose vision for an integrated scale-driven manufacturing platform has made Aequs a preferred partner to companies like Airbus, Collins, Safran, and many others as well. Mr. Melligeri, thank you very much for joining us here in our studios.
Thank you, Prashant. Appreciate it.
Well, before I come to you and we do the Q&A here in the studios, why not travel to the ground, to Belagavi, for our viewers, get them a sense of what the company Aequs is all about. My colleague Madiha traveled to the company's manufacturing facility and really sort of, walked through the entire facility and brings us this report about what Aequs does, what it makes, and of course, the size scale of this operation. Take a listen.
India has come a long way in aerospace manufacturing. For example, a small town in Karnataka is making parts for some of the biggest aircraft of the world. What you see behind me is a 250 acres special economic zone by Aequs. About 4,000 different parts that go into some of the biggest aircraft that fly around the world are made here every single day. And we have with us Mr. Rajiv Kaul, the Managing Director of Aequs, who is going to be showing us the facility today of what happens here every single day, how these parts are manufactured. Mr. Kaul, thank you very much for speaking to CNBC TV18 and taking us, giving us a tour of the factory. But before that, tell us what is so special about Aequs.
First, let me thank you for being here, taking time and coming out and being here. What is the difference is that every commercial aircraft that flies in the world today, there's some part which comes out of the
Every commercial aircraft that flies today in the world has a part that is made by Aequs. Okay, why wait then? Let's see how these parts are made. What are the parts that you directly supply to Airbus and Boeing?
We make a lot of structural parts, mostly in the three. These range in terms of the parts also. There are like aluminum part, steel part, titanium. Within the part metal configuration also, aluminum, steel, titanium, Inconel, and various other parts. We typically supply pretty much in all the ranges and do all complex machining. It can again range from 3 axis, 4 axis, 5 axis type of machining engineering. We supply.
Just to educate our viewers about what are the different type of suppliers. There are tier 2, there are tier 3, there's tier 1, and then there is a supply chain, right? Where does Aequs stand there?
We are tier 1 as well as tier 2 within that.
Okay.
In the supply chain. Like typically it is like Airbus, Boeing are the two OEMs, aircraft, major this one, other than Embraer is there.
Yeah.
I think these are the two major players. Then comes the subsystem level guys, like which are Safran, Collins, Honeywell, EW. These are like system level guys. Then come the detail part guys. So that is the third, and fourth is the raw material guys. That's the chain and everything. We supply as directly to Airbus, Boeing, and also through some of the major subsystem guys.
Okay. this is the precision manufacturing unit.
Precision manufacturing, where the machining is. These are the parts. What you see is aluminum part.
Okay.
This goes to Airbus directly, and these go into the fuselage.
Very heavy.
You cannot. Yeah, you cannot. You have to be very cautious too.
Because it is very sharp.
Sharp and all this.
Yeah.
This is the part. This is a pylon part, which connects the engine to the wing. There are brackets, many brackets, and all those things.
Yeah.
Which connect the engine. When it's connected to the wing, this is one of the parts there. So
Very
you can
important.
understand the criticality of these parts. So in aerospace, everything is critical. But
Every nut.
every nut is a critical.
Yeah.
Now, if you see this, this is the door stop. Door stop is actually, now it will be with the color and everything. The door and this connects. When you open the door, there are on the sides, you will see dark, this one.
I'll pay attention
You'll
now.
pay no attention.
Yeah.
And it is visible every time. In fact, every time I go, I see how many doors has, generally products. So here, what we are seeing is a flexible manufacturing system. If you come here, so you can see like these machines are working, but you can see very few people here.
Very few people.
Okay.
Yeah.
So that's where, like in the Western countries and all
Which
those,
is
they
why
brought
this
this
is
one.
called flexible.
Manufacturing system.
Okay.
So parts get moved on that, go to each individual machine.
Okay.
And part loading and unloading happens here for any of the machines. So this is the spinner, that's what I was telling you about. So this is like the forgings, basically. This is forged, then it is comes in the shape, then we do the machining, then we do again painting. You would have seen that what you see here, right?
Correct.
White and
the
everything,
white
you know,
spiral, yeah.
that-
Yeah. So at this facility, what is the capacity utilization then? Are you at full capacity?
At aerospace, currently our capacity utilization is around in the tune of 65 to 67 range. So we always have capacity open.
Okay. So would you want to then extend your current capability, current capacity to continue doing what you're doing currently or have more products on the portfolio?
Like first is like currently in terms of, we are currently evaluating a casting now, expanding our supply, building a casting. We are currently evaluating a casting joint venture with Magellan. So that is one of the capabilities we'd like to add along with the forging, casting.
Okay. Thank you, Mr. Kaul, for speaking to CNBC TV18 and giving us a tour of your fantastic facility here. We wish you all the best. So that was it. We are done with the tour of the 250 acres of Aequs's manufacturing, Aequs's special economic zone and the different verticals, the manufacturing verticals that they have. They make about 4,000 parts, different aviation components manufactured right here in this facility. Let us know what you think about where India stands currently in the global aviation ecosystem and what more can India do to be a big stakeholder in the global aerospace supply chain. Thank you very much for watching and keep watching CNBC TV18 for more such aviation deep dives.
Okay, well, that's an excellent report from my colleague Madiha from the ground, as we promised, in Belagavi, the Aequs facilities. And that was just a 6.5-minute report. I'd urge you to go online, go to YouTube, and there's a full, much longer 20-minute video you can find, which is much more exhaustive, much more extensive as well. But, well, Mr. Melligeri, thanks for waiting. I hope that report was well done.
Very well done. Very well done. Thank you, Madhya.
So talk to us a little bit about, the origins of the company, how you decided to sort of, become an aerospace manufacturer.
Yeah, origin of this company comes from engineering background.
Right.
I started as a Quest Global Engineering with myself and my partner Ajit Prabhu started this company earlier. And then later we realized that manufacturing has a different capital structure and we had to be separated out. We spun off to the shareholders. I took responsibility to drive this and rebranded it to Aequs. And the idea has been to, looking at India back in 2007, India had only 20% value add, in-country value add in the products, like components.
Okay.
Everything was getting imported. There was no surface treatment capabilities or the forging capabilities. We felt that India, to be successful in aerospace manufacturing, and ecosystem, we have to build our own India ecosystem. 100% in-country value add has to happen. So for that, we need a scale. We need to leverage India engineering capabilities and also able to bring in vertical integration. So with that mind in focus, we set up a first India aerospace ecosystem in Belagavi as a special economic zone. And we went about doing the joint ventures with Aubin Duval of France and Magellan Aerospace of Canada to bring in the forging, machining, surface treatment. We also have a joint venture with Saab Aerospace at that time. We later bought them out for the the assembly of the doors and various assemblies. So the whole vertical integrated ecosystem. Today, I can say proudly that we have been able to, over 15 years, to produce products where 100% in-country value added. For example, we make like 7,500 wheels per year, fully
7,500
wheels per year for the aircraft industry, pretty much across all the aircraft programs. And they are fully vertically integrated, all the way from aluminum from the country, forged, machined, finished here. So that is like a, by itself, unique situation what we have done in the country. Example.
So annually 7,500 wheels. Sorry, I'm a lay person here. So that's like what, 3,000 plus aircrafts.
7,500 wheels. About 75,000 wheels are produced every year. 60% of them are aftermarket. The remaining are OEM.
I see.
So the wheels are basically aftermarket is large because there are after certain landings wheels have to be changed. That's what it is. So we produce this, and with the whole ecosystem being set up and 100% done in India is itself a big achievement.
Mr. Melligeri, do you sell directly to the Airbus and Boeing, Boeings of the world, or you will sell to somebody who then sells to these companies?
Depends. And for example, wheels, we sell it to Safran Aerospace, which is a French company, and they sell it to ultimately to the sometime to the airlines, sometime to the OEMs, depending on where it is. And we also are a supplier directly to the Airbus and Boeing and to the tier ones. So depending on where it is, we do significant amount of work with Airbus directly. Also, same as Spirit and Boeing, same way.
I'll get more numbers, etc. in a bit. But when you started, and how easy or difficult was it to break in to kind of, or you had a background in it? And
we are coming from a design background. We are already working with Airbus on the design side of it. Several of our customers already are design customers. So it was easy for them to
they knew your bona fide capability, etc.
Absolutely. Otherwise, it's very difficult to break in because there has to be a level of trust here and capability has to be demonstrated. We demonstrated engineering capability which led us let us do this manufacturing. And also we laid out early on itself a very long-term view of how we are going to evolve this. And there is nothing exists like this in the world. Uniquely, Airbus in fact awarded us an innovation award for building an ecosystem like this in 2016. And that brings in confidence for our customers to put in more work. Even through the COVID, we did not shut down a single day. We produced, delivered on time, 100%, zero defect to the customers consistently. That makes a big difference.
So when you say ecosystem, say, just as an example, for a product value of 100 rupees which leaves the factory gates, the factory that we just saw, how much is out of that 100 made within and how much is kind of, what's the value add to you in that sense?
Today, we have within the zone, up to 90% is made within the zone.
Okay,
some of the products. Some of the products are 70, some may be 60, depending on the value of the materials. And within India, when I mentioned wheels, is 100% because we have gotten approval of the aluminum producer for this qualification. With that, within the country, 100% is happening today.
Okay. Within the country, but you're making
maybe 10% is coming from outside, 90% is happening within the zone.
Within Aequs zone. I see.
But material itself is a whole another, we have like, for example, just to give you a little bit of complexity and understanding of the industry, we have about 4,500 part numbers we do, unique parts. And these are out of 122 different unique material specifications. And they go through, almost 195 different surface treatment specifications to become a finished part. Then they get into assemblies. So that's how the complex supply chain is. And sometimes these parts were made over 5,000 miles traveled back and forth. Today it's happening in 500 meters. It's significant savings from green, sustainability perspective and ability to sustain the growth you know, and much easier to deliver any kind of challenges we have supply chain side of it.
Now, just one more question. What, say, if your sales were 100, what percentage of the sales are coming from joint ventures?
It's only about 20% because value add happens further in machining.
Okay. Okay.
You know?
Okay. And these are joint ventures. This 20% is joint ventures where you are
50-50 joint venture
50%,
partners.
Okay.
You know?
And these are long-term in nature.
We are 15 years when joint venture partners. We continue to expand our surface treatment facility joint venture with Magellan Aerospace of Canada. Started a 17,000 square feet facility in 2009. Today, it's about 120,000 square feet facility.
Sure.
It's the largest in the country. It has most number of approvals from OEMs and tier ones.
Sure.
So that brings in parts all over the country into this zone.
Sure.
For processing.
Sure. You know, when we talk to auto companies, sorry, unfair comparison, but we ask them, well, what's the kit value? I mean, in terms of, you know, what is if the product costs X, what percentage of that value are you playing in? Yeah. I don't know what a plane costs.
So, I mean, I think we can say that, you know, the today I can say that we are about $150,000 of Airbus A320 value happens at our place with Aequs.
Sorry, repeat that again?
$150,000 per aircraft of Airbus A320 happens at Aequs.
Wow. Okay. Okay.
You know?
Okay.
And $1.5 million worth of, you know, Airbus A50 level happens.
So $150,000 worth of one model of Airbus?
Airbus A320.
And $1.5 million worth of sort of products come from you. Yeah. And what's that as a percentage of the
aircraft cost about $45 million, you know.
I see.
As a selling price.
Right. So is there a long way to go in that sense?
No, look, components are certain fundamentals for then goes into assemblies and further value add happens. Obviously, you have to take the BOM of the aircraft. What is that going to be? Total bought out items because there's a, you know, gross margin perspective. Sure. So about, you know, so basically there is a long way to go. We are scratching the surface. Just to give you example, today as India as a country, we are maybe 2% of the global supply chain.
Yeah.
Okay. Yeah. And we're about 5% of the global aviation market. You know, India is going towards 10 to 15% of the global aviation market if you had to have a billion, passengers flying in India by 2040. So that we need to be getting to 5-10% of the global supply chain. So opportunity is large as an industry. So for us, continue to grow. You know, only way to take our market share.
Yeah. You know, and with this table will come up for our viewers. What I understand, correct me if I'm wrong, aerostructures is about 40%.
Yeah.
Engines are about, I mean, this is the total value. Engines are about 20%, avionics, electronics 15, MRO component systems 15, and 10% is others. So aerostructures is the big one.
Piece, which is fuselage and wings.
Right.
Where we, you know, body and the wings are the biggest component of this. And that's our biggest play also. Out of 90% of our parts are from fuselage and wings today.
Okay, and I mean, of course, engines is another game altogether, right? I mean, we are...
Engines is, you know, obviously we do a lot of engine parts like forge and machine today, but a lot of our engine parts also happen in our French facility. And because we have capability, they're landing gear and engine components today, and we're doing more and more in India today. And also vertical integration becomes a much more bigger play there because most of the engine components are forged and machined. So our forging press, unique in India, 10,000-ton hydraulic press, largest in the country, helps us to build this vertically integrated ecosystem.
You know, when I spoke with both Boeing and Airbus, the former heads of both companies, they said avionics and electronics is also is a segment where they expect to see a lot more growth, right? And would you agree with that?
I agree with you. I agree because that's where it comes from the engineering services side of it, right? Coding, avionics, engineering services, extension of that into building the boxes and necessary electronics. You know, EMS companies are some of them expanded there. That's a whole another area of aerospace industry.
Got that. Is this what you supply only for commercial, or is there a component for defense as well?
We in India, predominantly our work is aerospace, commercial aerospace. In our French facility, we do some military work. For example, we do Rafale, you know, landing gear, main fitting we do, and also in US facility, what we have, we are ITAR approved facility. We do military work there. So in India also we do a little bit of military work, but not a whole lot. Predominantly our focus has been commercial aerospace industry.
Okay. Mr. Melligeri, I have to take a quick commercial break here. Allow me to do that. We'll continue this chat in just a bit.
Thank you.
take that break. Very interesting conversation here. Coming right back. Welcome back. You're with us here on the Global Reset on CNBC TV18 Prime. I'm in conversation with Aravind Melligeri, Executive Chairman and CEO Aequs. It's one of the largest aerospace manufacturing companies out of the country. Mr. Melligeri, thank you for waiting. I just wanted to ask you, this is, globally a lot is changing in terms of, industrial policy, for example, is a big thing now. The state decides and companies follow. They say, well, this is the way to go, and then, capital will follow, companies will follow. And we're seeing that over and over again in many areas. Aerospace is, of course, a high priority sector. How dependent, not the business, because these are long-term agreements, etc., but is there a risk that you see at all? And I'm talking specifically with regards to, of course, the US.
Yeah, I mean, look, every business is susceptible to the global geopolitics, and we have seen this tariff impacting everywhere. But the way we look at it is, historically, aerospace has been a very global business. Aviation has been a global business, and parts flow across the country, across the world to finish aircraft. And so it's generally accepted that it should not be having tariffs.
Sure.
For the aerospace manufacturing OEM side of it, even MRO side, India also has done a lot of changes in the MRO policies to make sure that it doesn't happen. And also, typically, a lot of aerospace industry sources have a lot of single source. Like us, we have 95% of the parts single source with us. So if there is a tariff, we have no choice, customers have no choice but to still take it. And it's painful, but it is ultimately when they export, they get duty drawback. So those are the things which kind of offset. But ultimately, we believe aerospace industry will be free to flow across because it's mutually needed. Across all the world.
But you said that there are certain product categories where for 95% of the market, you're the supplier.
We are sole source on 95% of parts. We do about 4,000 part numbers.
Wow. For 95% of the 4,000 parts that you sell, you are the sole supplier.
Yeah.
Well, that's quite amazing. But is that a risk as well?
Well, that's why you have to perform.
No, in the sense that if I am buying from you, I want options.
Well, options cost money, so you need to make a choice. And if I'm delivering 100% on time with the zero defects, you would rely on me.
What is the big advantage that, as you see, and you've been in the business a long time, I mean, we have a lot of engineering talents. That is not. I mean, is cost arbitrage the big one?
No, the capacity. Today, look, pre-COVID, the situation was a bit different. Post-COVID, we see world. There is something called cost of capital, which was never seen, has shown up.
Sure.
Right? Obviously, aerospace is a capital-intensive business. Suddenly, they are looking differently. And during the COVID time, a lot of engineering talent and a lot of manufacturing floor talent went away. Early retirement, or they took retirement at the border. And that created a vacuum. And when post-COVID, the industry came back very fast. And ramp-up happened. And OEM order book filled up. And they need more when the capacity is not there.
Sure.
So that brings in. Obviously, India brings the cost arbitrage, but that is not the number one priority for the customer. Today, they need deliveries. Number one priority is delivery and quality products. Quality is given in this industry. Delivery, on time, ramp up, support is very important. We delivered customer ramp up, last year, well in advance. In fact, Airbus gave us a ramp-up champion award last year for recognizing this, delivering much ahead of anybody else on a program. So if we can do that, we get more confidence, and we can bring in more work into the country. And India has all the advantages necessary, high level of engineering talent available. Today, cost of capital for us is almost same as West.
Yeah. Cost capital is no longer a constraint.
And access to capital is also much more improved today in manufacturing compared to what was it just before COVID.
Absolutely.
So all those have become an advantage today, and a lot of tailwinds from that perspective. And on top of it, aviation market in India is growing much faster than the global aviation market, twice the size.
Right.
That brings in a necessity for the OEMs also to look at India as a market, as a supply sourcing and also aviation market. Sure. So combination of these things are driving the opportunity in India.
Okay. So it's quality, of course, is a given. It's scale, reliability, the ability to ramp as necessary.
Delivery is the
Delivery is the number one. After COVID, that kind of has become...
because people are not delivering. Suppliers are failing
Yeah.
in the West.
Yeah. Yeah. Mr. Melligeri, you're also an IPO-bound company. So, of course, I'll be careful and not push you to give me or ask you for things which you cannot reveal. But give us a sense of what's the size of the business now, or the last reported numbers. And broadly, and I won't hold you to numbers, what you give me, what kind of growth are we kind of seeing?
Look,
on a consistent basis?
Yeah, in aerospace side, we have grown consistently. Look, COVID was a big hit for everybody in the aerospace industry. Post-COVID, we have been growing at 20+% last 4 years, year on year, last 4 years. And we continue to believe that we have opportunity to grow at that rate or better.
20%?
20% plus,
Both,
year on year.
revenues and net profits?
Bottom EBITDA perspective. And we are able to grow. And also, last year, we've done about $100 million revenue, and about, we're able to continue to grow that business.
And the IPO will be a mix of both primary and secondary offering? Or?
Yes, primary and secondary.
Okay. And the money goes back in
Company.
towards expansion here in India?
Expansion in India.
Expansion in India.
Absolutely. India is the biggest growth market for us.
Well, a lovely conversation, Mr. Melligeri. I hope we managed to scratch the surface of what Aequs is all about. And the aerospace opportunity is a theme we want to continue to sort of, build on here on this program and get more companies like yourselves as you continue to execute. Thank you very much.
Thank you for the opportunity.
Thanks very much. Well, I think that is Aequs, a large manufacturer of aerospace components, and that statistic actually is quite stunning. 95% of the 4,000 odd, products that Aequs makes, they're the sole single supplier. So that's quite something. It's a wrap on this edition of the Global Reset. I hope you enjoyed it, learned from this episode. More comes up after a quick commercial break.